All right, so let's do a deep dive into something that I know you've all been looking into lately, and that is Bitcoin.
Oh, yeah.
Bitcoin. Specifically, its recent price surge and some of the network activity that seems to be driving things behind the scenes.
Right.
We've got two articles here. One is all about hash rate and mining difficulty, and the other dives into Bitcoin's price jump alongside some market news about Tesla, Coca-Cola, even the U.S. election.
Interesting.
So let's see what we can uncover here.
Yeah, it is fascinating to see all these different elements kind of converging both within the Bitcoin network itself and then these broader market forces that seem to be kind of pushing Bitcoin in a certain direction.
Yeah, for sure. So first up, Bitcoin's hash rate just hit a new all-time high.
Wow.
925 EH per second.
That's a mouthful.
It is a mouthful. Now, I know that might sound like a foreign language to some people, but what it really means is that the computing power dedicated to mining Bitcoin is massive.
Absolutely.
We're talking quintillions of calculations per second.
Quintillions, it's hard to even fathom that number.
Right.
But this surge in hash rate really suggests that there's a significant increase in the number of miners globally. More and more people are essentially trying to solve these really complex Bitcoin puzzles in order to add blocks to the blockchain.
Right.
And it begs the question, why are so many people jumping in right now?
And it's not just the hash rate that's climbing. It's also about to get even harder to mine high.
Right.
Bitcoin. Mining difficulty is set to increase by over 4%.
Yeah.
Which puts it close to its own all-time high.
This is really interesting because this difficulty adjustment is actually a self-adjusting mechanism. It's a key feature of how Bitcoin works.
Right.
As more and more miners join the network, the rate at which blocks are found naturally increases, so to keep that process stable, the difficulty level automatically rises.
Okay.
And this ensures that the network stays secure and that blocks are discovered at a relatively consistent rate.
So it's like the system's doing what it's designed to do.
Exactly.
More miners equals higher difficulty. But what is behind this sudden surge in mining activity?
That is the million-dollar question, and this is where Bitcoin's price action comes into play.
Well, speaking of price action, the article mentions that Bitcoin recently surged to $69,500.
Wow.
Which is the highest it's been since June.
Really?
And it also mentions something called the Fear and Greed Index, which is currently sitting at 72.
Ah, yes. The Fear and Greed Index. It's essentially a gauge of investor sentiment, and a reading of 72 suggests that the market is leaning heavily towards greed right now.
Interesting.
Meaning investors are feeling pretty bullish.
So they're greedy.
They're greedy. And as we just discussed, the increase in mining activity often reflects this, positive price expectation.
Okay.
Miners are investing heavily in hardware and electricity because they're essentially betting on Bitcoin continuing to rise.
So they're thinking, okay, the price is going up. Let's get on this train before it leaves the station. But it's not just these internal factors within Bitcoin, right? What about everything else that's happening in the market? How does that play into all of this?
Yeah, that's where things get even more interesting because our second article brings some other elements into the mix. We've got Tesla's earnings, Coca-Cola sales figures, and even the potential for a Trump comeback in the 2024 U.S. election.
Wow, that's a lot to consider.
It is a lot.
How do those things all relate to what's happening with Bitcoin?
Well, it might seem like a stretch at first, but it all comes down to risk appetite and just overall market trends. Companies like Tesla and Coca-Cola are often seen as kind of indicators of how the economy is doing. So if they're having strong earnings, that could signal, overall stability and growth, which might make investors more willing to put their money into riskier assets like Bitcoin.
So a healthy economy emboldens people to explore things like crypto.
Potentially, yeah.
That makes sense. But what about Trump? How does he figure into all of this?
Well, Trump's policies are often perceived as inflationary due to things like tax cuts, trade wars, increased government spending.
Yeah.
And all these things put upward pressure on prices.
Right.
And historically, inflation tends to benefit alternative assets like gold. And you guessed it, Bitcoin.
Bitcoin.
So some investors might be anticipating this dynamic in the event of a Trump victory.
So it's like all these pieces, the mining activity, the price movements, market trends, even politics are starting to fit together.
Exactly. It really highlights how interconnected these systems can be.
And speaking of interconnectedness, we can't forget about what's going on in China. They just lowered their lending rates to try and boost their slowing economy.
Ah, yes. China's actions can definitely have these global ripple effects.
For sure.
And their decision to cut lending rates is an attempt to inject more liquidity into their economy and stimulate growth, but the impact of that decision can extend far beyond China's borders. It really does, it underscores how interconnected global financial systems are. China's stimulus measures could lead to more money flowing into the global market.
Right.
And some of that money could find its way into Bitcoin. It's all part of this complex web of, interconnected systems.
This is making me think about all this talk about hash rate and mining difficulty. It sounds very technical.
Yeah.
Can you maybe break it down in a way that even I can understand?
Sure. You can think of it like a global decentralized lottery where everyone is competing to solve a complex math puzzle.
Okay.
And the first one to crack the code wins the prize, in this case a block of newly minted Bitcoins, plus any transaction fees people have paid to have their transactions included in that block.
Okay.
The hash rate is essentially a measure of the total computing power of everyone playing this lottery.
So the more computing power you throw at it, the faster someone will solve the puzzle and win those Bitcoins.
Exactly. And the mining difficulty is the system's way of making sure that blocks are found at a relatively consistent rate, roughly every 10 minutes.
Okay.
So if more people join the lottery and the hash rate increases, the puzzle gets harder.
Makes sense.
If some people drop out and the hash rate decreases, the puzzle gets easier.
So it's like a self-balancing act.
Exactly. A self-balancing act to keep things running smoothly.
But what's the purpose of all this computational effort in the first place?
Yeah.
Why go through all this trouble?
Well, this computational lottery, as you called it, is really what keeps Bitcoin secure and trustworthy.
Okay.
It prevents anyone from manipulating the system or double spending the same Bitcoin.
Right.
This process is called proof of work, and it's really the foundation of Bitcoin's decentralized nature.
So all this complex math isn't just some brainy game.
No, not at all.
It's actually what keeps Bitcoin safe and sound.
Right.
That's pretty impressive.
Yeah.
But all this mining must require a lot of energy, right?
You're absolutely right. That is a common criticism of Bitcoin. The energy consumption associated with mining has been a topic of debate for years.
Right.
However, there are some important points to consider.
I own all ears.
Firstly, the majority of Bitcoin mining now relies on renewable energy sources, especially hydro and geothermal.
Okay.
Secondly, Bitcoin miners often strategically set up their operations in regions with surplus energy production, which can actually help to stabilize local electricity grids.
So it's not just draining the planet's resources.
Exactly.
It can actually be part of the solution in some cases.
Absolutely. And lastly, it's important to look at Bitcoin's energy consumption in comparison to other industries, such as traditional banking or gold mining.
Right.
When you factor in the environmental and social costs associated with those sectors, Bitcoin's energy consumption might not seem quite as excessive.
So it's all about perspective.
Yeah.
We often focus on Bitcoin's energy use, but might overlook the hidden costs of the systems it's aiming to replace. It seems more and more people are willing to make that trade-off as they see the potential benefits of a decentralized, secure, and transparent financial system.
And as the technology advances and becomes even more energy efficient, these concerns are likely to diminish further.
Now let's go back to the price action for a minute. We've talked about how Bitcoin's recent price surge seems to be driven by a combination of network activity and what's happening in the broader market. What's your take on what might happen in the future? Is this just a temporary spike, or are we looking at the beginning of a sustained upward trend?
Well, that's the question everyone wants answered, isn't it?
Right.
Predicting the future of Bitcoin is notoriously difficult, even for the most seasoned analysts.
Not bad.
But I can offer some perspective based on what we've seen historically and the trends we're observing now.
Okay, I'm all for some expert perspective.
Historically, Bitcoin has followed a cyclical pattern of booms and busts. We've seen these periods of explosive growth followed by sharp corrections. And this is often driven by speculative trading and just investor psychology, which can be very unpredictable.
Right, it's not for the faint of heart.
No, it's not.
But where do you think we are in this cycle right now?
Well, there are a few signs that suggest we could be entering a new bull market phase.
Oh, okay.
First, there's the halving event, which happens approximately every 4 years and cuts the rate at which new Bitcoins are created in half.
Right.
This event is often followed by periods of price appreciation.
Interesting.
We're also seeing more and more institutional adoption with companies like Tesla and MicroStrategy adding Bitcoin to their balance sheets.
Ah.
And let's not forget the growing awareness and acceptance of Bitcoin as a legitimate asset class.
It does feel like things are shifting. More people seem to be taking Bitcoin seriously, and that's bound to influence its price over the long term.
Yeah, I think so.
But with any investment, there are always risks, right?
Absolutely. Bitcoin is still a relatively new and volatile asset. Its price can swing dramatically based on news events, changes in regulations, even things like tweets from influential figures.
Ah, yes, the infamous Elon Musk effect.
Exactly.
A single tweet can send the market into a frenzy.
Oh, that's right.
So what advice would you give to someone considering investing in Bitcoin for the first time?
My advice is always the same. Do your research, only invest what you can afford to lose, and be prepared for a wild ride.
Okay.
Bitcoin is not for those who are risk-averse,
Right.
but for those who understand the technology and the potential. The rewards could be significant.
It sounds like a high-risk, high-reward scenario, but that's part of what makes it so captivating.
Exactly.
We haven't talked about the potential impact of the upcoming U.S. election yet.
That's a whole other layer to this. The upcoming U.S. election is certainly something to keep in mind as we analyze, potential influences on the crypto market.
Right, because we often think of politics and finance as these separate worlds, but in reality, they're very much intertwined.
Yep.
Government policies, regulations, even political rhetoric, it can have a big impact on how financial markets move, and Bitcoin is no exception.
Yeah, you're right.
The article we looked at actually pointed to a potential Trump win as a factor that could be contributing to Bitcoin's recent surge.
Right.
But why is that? How does a change in U.S. leadership, potentially translate into gains for a decentralized digital currency?
Well, it really boils down to a couple of key factors.
Okay.
First, as we discussed earlier, Trump's policies are often viewed as inflationary due to things like tax cuts, trade wars, increased government spending.
Okay.
All these things tend to put upward pressure on prices.
So more dollars in circulation chasing the same amount of goods and services
Exactly.
could lead to inflation. But how would that benefit Bitcoin?
Well, Bitcoin is often seen as a hedge against inflation.
Right.
Unlike fiat currencies, which can be printed at will by central banks,
Right.
Bitcoin has a fixed supply capped at 21 million coins.
Right.
This makes it very appealing during times of economic uncertainty.
So it's kind of like digital gold.
Exactly like digital gold.
A finite resource that can't be manipulated by governments.
Precisely. When people start to worry that their savings are losing value due to inflation, they often turn to assets like gold and Bitcoin as a store of value.
Okay, that makes sense.
Yeah.
But there's another piece to this puzzle, right? Something about regulations.
Yes. The second factor is regulatory uncertainty.
Yeah.
The current administration in the U.S. has taken a relatively cautious approach to cryptocurrency regulation.
Right.
But with a potential Trump victory, some investors are banking on a more crypto-friendly regulatory landscape.
So they're betting that a Trump administration might be more likely to embrace cryptocurrencies and create an environment where they can flourish.
That's the general idea. Trump has historically expressed support for innovation and free markets, so some believe he would be more open to fostering growth in the cryptocurrency sector.
It's a gamble for sure, but it seems like some investors are willing to bet on that Trump-fueled crypto boom.
They are.
But we can't forget that the other side of the political spectrum has their own views on crypto as well.
Of course, the Democratic Party has a wider range of opinions on cryptocurrencies.
Right.
Some lawmakers have voiced concerns about their potential for illicit activities and their environmental impact.
So it's not so clear-cut on that side. A Democratic victory could mean tighter regulations, or it could mean a more hands-off approach.
Exactly. It's really hard to say for certain.
Yeah. No one can predict with absolute certainty how the U.S. election will impact the world of cryptocurrency.
Right.
But it's definitely something that investors are keeping a close eye on.
Absolutely. It's a major factor.
It just shows how Bitcoin is connected to the world around it in these complex and sometimes unpredictable ways.
It really does.
We've covered a lot of ground here. Hash rates, mining, difficulty, market trends, the global economy, even U.S. politics.
Yeah, it's been quite a journey.
It has.
But hopefully it's provided, a more in-depth understanding of the forces that are at play in the world of Bitcoin.
For sure. So here's the question for all of you listening out there. What does all of this mean for you and your understanding of Bitcoin?
Yeah.
What other global events or trends do you think could come into play?
That's a great question.
It's definitely something to think about.
We've only just scratched the surface here. It's always more to learn and explore in the world of cryptocurrency.
Exactly. Keep those mental gears turning until next time.